Welcome back. We are just awaiting market opening this Monday morning, and Saurabh Mukherjee of Ambit Capital is now with us. Saurabh, good to have you on the show today. So you've been, of course, fairly confident on the markets and the kind of talk we've got from New Delhi. Going through earnings season and the way February's shaped up after bumper flows, are you at all unnerved that the markets, looking to consolidate rather than move up despite so much of money coming in?
I think there is to be expected. If you look at the amount of fresh capital that's been raised, the Axis QIP of $1 billion, the NTPC disinvestment, the NMDC disinvestment as well, so much of the flows have gone into fresh capital raises that the secondary market actually hasn't received that much money. Plus, we're at that stage of economic recovery where everybody out there wants to see some evidence of the recovery taking hold, and obviously weak macro data makes people nervous. We remain confident that by the year end the Sensex will reach 23,000. We remain confident that we'll have a good Q4 earnings season and we'll have a solid budget, and that should give the market some strength in the coming months.
Saurabh, the finance minister recently on his trip to London said that watch out for the budget, we mean business. Clearly is out to surprise the markets. In terms of expectations, do you think it's going to be a solid budget this time around, which could be a massive positive for the equity markets?
We think so. I mean, he's already highlighted this 4.8% budget deficit target, and I'm pretty sure he'll outline a set of numbers which will be broadly credible. My reckoning is the government will probably end the year end FY14 at somewhere around 5.1, 5.2. But I think a 4.8% target, now that it's been announced, I'm sure he'll deliver a set of numbers which broadly points to sensible arithmetic. I think we'll see a widening of the indirect tax base. We'll probably see a tax surcharge on the rich, and I think we also see a very aggressive disinvestment program, both public sector enterprises and I think government land. There'll be a big government land sale program I think will be announced. The question is, what will be the big surprise element? Will there be, for example, a CGT exemption on FIIs? I think that's that joker in the pack element is I think what all of us are searching for. What is it given it will be a solid budget? It will be a tightening, consolidating budget with credible money raising measures.
Very quickly, before we hit the opening, Saurabh, as you're talking about an optimistic market scenario, how much of a rate cut, if at all, are you factoring in that projection?
We reckon the RBI will cut again in March. I think given what the governor said on Friday after that, on Thursday, after the 5% advance estimate from CSO came out, the governor said that the RBI would take cognizance of it in its monetary policy. I think it strongly points to another rate cut in March, perhaps even a 50 bips rate cut in March. I think overall, including the March cuts, I think there will be another 100 bips of further cuts from that.
So just give us a couple of minutes, we'll come right back to you. A quick check of the markets are opening up this morning. Remember, it is going to be a quiet start. Last couple of weeks have been very rough for the Lal Strait. This morning as well, we're relying in a very flat opening. No cues coming in for world markets. Asia, remember, is actually closed apart from Australia today. 46 points higher, that's as quiet gets. Couple of stocks that are trading, looking active in morning sessions. You've got BHEL that's up 0.5%. L&T on the other hand is actually trading flat with a slight negative bias. Your metal stocks are also not doing too much, so Hindalco, JSPL, Steelite, Tata Steel are all trading flat with a slight positive bias. M&M, we saw those numbers on Friday. The stock is reacting positively to those, up 0.7% is what we have on M&M in morning trade. Some amount of nervousness on ONGC ahead of its numbers, marginally lower is what we are seeing. SBI as well announcing its numbers this week, very, very flat is what the stock is doing in early minutes of trade. ICICI Bank on the other hand is up 0.2%. The HDFC Twins are both trading mix. Amongst your other auto majors, apart from M&M, Bajaj Auto, Maruti are also trading flat with a slight positive bias. Hero Motorcorp on the other hand is having another down day of trade. ITC, HUL both trading weak. Bharti Coal India are also down nearly 0.5%. Reliance Industries after its recent fall is trading flat. $865 is what we have. Tata Motors, those turning out to be an outperforming stock this morning. 1.5% higher is what we have on Tata Motors. The likes of an Infosys, TCS, remember, did quite well. HCL Tech in terms of trade on Friday. Infy today is up another 0.7%. TCS is trading flat. Wipro is up nearly 1% in the morning trade. Sun Pharma, they've chosen not to go ahead with that merger, or rather complete acquisition of Taro because of the price. The stock is not looking too bad. Shareholders are giving that a thumbs up. 1.5% high is what we've got on Sun Pharma post that announcement and post the fact that they've got a great set of numbers that they posted on Friday. Cipla is trading flat. Dr. Reddy's is up about 1.5%. Well, that's the Sensex. Quickly pull up the Nifty so we can move on and just take a look at what's moving and what's not. Quiet start of the Nifty, 59.10 is what we have. The breadth of the market is slightly positive. A check on the big movers and shakers in the Nifty as well. So, of course, stocks such as Tata Motors are the top gainers. Tata Motors, Dr. Reddy's, Sun Pharma are doing quite well. Axis and BHP are trading positive. On the sell side, cement is looking weak. Lupin is down. Tata Power is lowest out of its earnings, and so is ONGC. BPCL is down about 0.6%. Well, that's the opening, so it'll be quiet start on the Lal Street. A few big movers and shakers though for sure.
Yeah, I'll just quickly run through some of the headline grabbers in terms of earnings reactions. Hexaware is the stock of the morning, 5% up. It seems the market's choosing to look at the glass half full rather than half empty, because the guidance for the next quarter, that's the Jan to March quarter of this year, is a lot more optimistic. They're promising margin expansion, they're promising revenue growth as well. So Hexaware reacting to that, 5% up on that stock. The other positive result reaction was NCC or Nagarjuna Construction, 2.5% higher. For Max India as well, numbers have improved year on year. So we've got a 1.5% gain going on to Max India. Disappointments include BGR Energy stocks down about 2%. We're seeing negativity on Bharat Forge as well. Their profits have halved over the last year, down to just about 50 crores. That's a stock that's down about 3.5%, 2% to 3% right now as we see things play out. There was a big block deal on Apollo Hospitals. Let's just get the stock going. Almost 4.5-5% of the company's equities moved around in these block deals since the morning. Stock's flat. 840 is where it's trading right now. Imami has managed a jump up in profitability. That stock's holding up as well. For DB Realty as well, after the shaky last 2 years, they've managed an increase in profits. The stock is holding up. Okay, it was at least last time I checked, it was up about 1%. Now it's just cooled off that a little bit. So this is what's moving as far as the result reactions are concerned. Let's see if there's anything else on the trading screen. GMR forgot to mention, the loss widens, but the stock is not selling off in a hurry. It's anywhere down to almost a year low. So we're looking at about 2.5% down on GMR. That's more or less it. Hexaware is the stock of the morning, still holding on to major gains. Flubex is up about 10% as well. That's an interesting move for sure. And then there's a Stray Infrastructure Finance with about a 2% up move. That's what we've got going on the screens for the time being. Saurabh, I was just looking at the report that you came out with earlier this month, where you've highlighted a couple of stocks that really stand to benefit with policy announcements, and these are across the board announcements, whether it's changes in taxation, whether it's the new diesel regime, etc. If you could run us through one or two of the best policy picks to play as we are in budget season.
Sure. I think the OMCs, I would start with the OMCs. There's clearly going to be a fairly long series of diesel price hikes now that the government has decided a month or so ago to deregulate diesel prices. I think over the next 7 to 8 months we will see continuous diesel price hikes, and HPCL, BPCL in particular, those stand out as positive beneficiaries of this government announcement. I reckon there's still 20 to 30% upside. One shouldn't forget that Indian Oil is a likely disinvestment next year, and in light of that, I think the government will look after the P&Ls of these oil marketing companies over the next 7-8 months. The other space I would look at is real estate. I think both in terms of a cyclical recovery in real estate and in terms of policy changes, I think the real estate sector will be a big beneficiary. I expect to see positive announcements on affordable housing in the coming budget. It will tick a lot of boxes, social inclusion, getting capex going. But over and above that, the Land Acquisition Act, which I think will get passed in the coming session, will also be a positive for the sector. I think my favorite plays in real estate would be plays such as Shobha, Prestige, Oberoi, good companies, decent balance sheets, good cash flows, and obviously there's the big one out there, DLF. They've already announced that they'll raise some money over the next 2 to 3 quarters. Combine that with impending elections and favorable policy change, I think DLF will be a stock which is hard to ignore in the coming quarters.
Well, what kind of appetite do you see for the government paper where a lot of supply is slated over the next couple of months?
think the critical aspect here is believability in the budget, which is one of the reasons I think it will be a solid budget. The finance minister knows how much is at stake here. It's not just the 10-year bond deal, it's also the credit downgrade. I think that's weighing very heavily on policymakers' minds in Delhi at the moment. And my sense is with a solid budget, with a recovering economy, 10-year bond deal should firm up and perhaps even come off over the next couple of months. But central to that is the budget, which I think will help bond deals cool down in the coming months.
Very, very sorry. But just give us 2 minutes. We'll come right back to you. Trading numbers kicked off on the 3rd National Stock Exchange. The news baby on the block. MCX Stock Exchange. Let's go across to Jayashree for more on that. Jayashree.
Exactly. The 3rd largest national stock exchange, that is MCX, has now been launched and start trading from today onwards. So if you have to talk about what is in store for the investors, we are hearing around the SX in the 40 index of India is going to be launched, which would comprise of the 40 large cap scripts. And they would also be trading in 1100 scripts, liquid scripts, and then ETFs, bonds, and also equity derivatives would also be something that is in the pipeline. So moving forward, they would be they are trading with 405 brokers, and these brokers have also been given an incentive about from 1,000 rupees to 1 lakh rupees about with the number of registered clients they have. And also, if you have to talk about what the management has to say, is that we should not be expecting very large volumes on the first day itself, as it will keep on increasing systematically, and a larger plan is in place, and so moving forward we can expect the volumes to keep on increasing. Back to you.
Right, thanks Jayashree for that. That of course is all about the MCX Stock Exchange that goes live today. Saurabh, just going back to a couple of earnings that we're expecting this week. So you've got ONGC, we've got SBI and DLF. Quite a few large announcements expected. Anything that you're nervous about this week?
The SBI will be the major one the market will focus on. Clearly, this is the majority of the banking system. The banking system, BankX, has rallied by 40-45% in the last 6 months. A big chunk of the rally hinges around the banking sector, and I think enormous amounts of attention and analysis will go into SBI's results. My sense is SBI will continue surprising on the downside on credit quality. I think there's more pain packed into SBI's balance sheet. On the power and infra side, particularly private sector power and infra, we are seeing very little movement to suggest that the pain in that sector will alleviate. And if IDFC, which I think is probably one of the best power and infra loan books in the country, if IDFC's results are anything to go by, I think SBI will surprise on the downside. This is probably our main anti-consensus call. As an underweight on banking is our main anti-consensus call, and this is our main worry spot for the Indian economy. That the banking sector is in trouble, will remain so for the next 2 to 3 quarters, and I think SBI will be a key guidance point for the market on how bad is the state of the banking sector in our country.
So, Saurabh, in that case, that's a very interesting call, because not too many people in the market are willing to go anti-financials. Then what would be your best themes to play? We've spoken about OMCs, you've spoken about real estate. What beyond these two?
So I think, as you're rightly alluding to, the first theme we are looking to play is stay with the grain of regulatory changes. There will be plenty, because the government has become so active, there's plenty of regulatory changes flying about, and I think it makes sense to stay with the grain of that. So MCs and real estate, I think, would be both plays on that theme. The second theme I would look at is auto. It's a solid sector. It's got a number of companies with strong balance sheets, good market positions, some good export franchises therein, and as the economy gradually recovers over the coming 3 or 4 quarters, as rates get cut by the RBI, I think auto will come back as a sector. Our strongest play there continues to be Maruti Suzuki. We also like Bajaj Auto, have been fans of that for a good couple of years now. Amongst the dog houses there, Exide Industries, we've been sellers of that for the last 6 months, but we put our sell stance under review this morning, because I think margins might have bottomed out in Exide's case. And also TVS, it trades at 8 times, half the multiple of a Bajaj or a Hero, and I think TVS could also be set for a recovery in the coming quarters. So I think auto is one large sector I would look at. Quality play, play. The other whole theme I will look at is top quality cyclicals. We already discussed Maruti Suzuki, but also remain fans of L&T, of Cummins, and a Kotak Mahindra Bank. A Kotak Mahindra Bank is one of our few large banks which doesn't have power and infra loaded up in its loan book. So play quality cyclicals, strong balance sheets, good management, and you stand to recover, you stand to benefit as this economic recovery proceeds. And L&T, Cummins, Maruti Suzuki, Bajaj Auto, Kotak Bank all plays on that theme of high quality cyclicals.
All right, Saurabh, we'll wrap it up on that note for this morning. Thanks so much for joining in. Good to get your views on the market.